Hello, everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the European Central Bank policy meeting to be held on July the 26th, and more importantly for you, the potential trading opportunities that will come about of the event. My name is Sasha, and I'm a financial analyst from the research department at 4Trade. I'm really pleased at the interest shown in our webinars, and thanks for your comments. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, we would like to present our new offer exclusive to those watching this webinar. To use this special offer, a code will appear on your screen during the webinar, which I will repeat at the end, that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours, and that this new offer applies to all of you, not just second-time depositors. If you make a deposit within the next 24 hours, you will receive a balance bonus. If you deposit 1,000 euros, you will receive a 2% balance bonus. If you deposit 2,500, you will receive a 4% balance bonus. Deposit 5,000 and receive a 5% balance bonus. Deposit from 5,000 to 15,000 euros and your overnight interest rate will be covered for 1 month. Deposit 15,000 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit 25,000 or more and your interest rate will be covered for a total of 3 months. You are, of course, free to use this offer however you choose. But let me tell you about market opportunities. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis, which includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So you can see in front of you an example of a relatively recent market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair. Below, you can see some geopolitical events that can influence the euro-dollar currency pair. It's important to look at the pivot point on which the calculations are based, which you can see on the center left-hand side of the screen encircled in blue. If the price reaches the level you can see on the screen, this shows the right moment in our estimation for you to come in and open a trading position if you decide to trade on this market opportunity. If you want to trade during the day, then you can see here the estimated trend direction, which is up in this case. It's also important that you know how to use the stop loss and take profit options. You have resistance and support levels outlined here. At those points, you can put a stop loss and take profit. And on the other side of the screen, you have calculations. If you close the position using take profit, you can expect these kinds of profits in green. If the price is going against you, then you could potentially have a loss of this amount at these support levels, in red. The pivot point then is used for calculation of support and resistance levels. These support and resistance levels are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So what is the ECB? The European Central Bank is the central bank for the Eurozone, and it sets and implements monetary policy for the Euro area. The main objective of the ECB is to maintain price stability within the Eurozone. Like many of the major central banks, it aims to keep inflation at 2%. Mario Draghi is the governor of the central bank, as you can see on the picture. That's the man himself. But the council consists of 6 members of the executive board and the governors of the national central banks of the 19 euro area countries. So how does monetary policy affect the economy and markets, which is much more important from our perspective? Well, monetary policy is the strategy used by a nation's central bank on the amount of money in circulation in the economy. Generally speaking, the rule is that when central bank decides to increase interest rates, it's likely that the value of the currency will increase. However, it's more complicated than that. Since market expectations are as great a factor as the bank decision itself. For example, if traders expect that the ECB will increase interest rates by a percentage point, it's likely that the value of the euro will grow before the announcement. However, if the ECB announces an interest rate increase of, say, only half a percentage point, the value of the euro might drop sharply, at least for a short period after the announcement. Speculation and expectations have a powerful effect upon the markets. Okay, so you can see on the chart before you how interest rates have varied over the past decade until reaching the record lows we have had until today. Until recently, interest rates were only one of the tools of monetary policy used by the ECB to encourage an expansionary or restrictive economic plan. The historic lows you can see on the table were designed to encourage the sluggish EU economy since the financial crisis. And today, the economic situation in the Eurozone is much improved. As you can see, Eurozone GDP is currently 0.4%. The inflation rate is 2.0%. After many months of being below, this is at the ECB target rate of 2%, and it is an important factor when the ECB decides to set interest rates. The unemployment rate has been falling gradually and is currently at 8.4%. So what happened at the previous ECB monetary policy meeting? Well, this was held on June the 14th, and as expected, the ECB didn't make any changes to its record low interest rate of 0%. However, the bank noted its satisfaction of achieving its target CPI, even if another key indicator, core CPI, is still under target. The most important news from the ECB meeting was the announcement that the ECB doesn't intend to raise rates before the second half of 2019. And that its stimulus QE, that's quantitative easing program, will end in December. Finally, the ECB president warned about the negative consequences of trade wars while announcing that GDP growth would be lower than expected at 2.1%, rather than the previously anticipated 2.4% this year. Of course, with a possible trade war and lower predicted growth, the ECB doesn't want to raise interest rates too soon, which could reduce growth further still. As a result, and completely in line with what you would expect with this type of bearish news, the euro sank. As we can see here, the euro dollar fell by some 1.88%. By the way, this graphic was actually taken from Bloomberg, which has a 6-hour time difference, which is why it looks as if I'm looking at the price of the euro dollar on the 13th to the 14th of June. In reality, we are looking at what happened on the 14th of June in Europe, just before and an hour after the ECB decision. The prospect of no interest rate hikes in the near future had traders selling off the euro, as we can see, while others abandoned the single currency due to EU growth prospects, which were lessened, as I said. The ECB meeting is actually a very good example of how deeply events can affect currencies and why traders see the ECB monetary policy meeting as a good opportunity. Also interesting for market impact are the release of ECB minutes, which gives us clues on future monetary policy and can move the markets when published. Since all was revealed about last month's decision at the Mario Draghi press conference, the release of the minutes last month was not significant. But through looking at the minutes, we can see opinions of other committee members or if there is disagreement on current policy, and this can affect the markets. So, ECB policymakers are reportedly concerned about the recent decline in the value of the euro against the dollar. Economic data from the Eurozone has been mixed recently, but broadly positive. However, the ECB and many investors are concerned about the prospects of a trade war, and this is influencing monetary policy. Officials won't want to hike rates if this endangers growth, particularly if growth is already being affected by US trade tariffs. For example, if they are placed on European car makers such as Volkswagen, BMW, and Daimler. This gives ammunition for those who believe that interest rate hikes should be delayed until the end of next year rather than earlier next year. This has been a view of many investors. However, this has put additional pressure on the euro as traders look to buy other currencies or sell euro-dollar. However, overall confidence in the Eurozone remains positive at the moment, and interest rates are widely expected to remain at the current level of 0% at this meeting. If a trade war is avoided, analysts would expect European stocks to continue climbing and the euro to potentially strengthen. Most traders expect a cautious statement by Draghi following the meeting to encourage the value of the euro to at least remain stable or possibly grow. However, it's a tricky path for the ECB president to tread. As far as bond buying is concerned, this will cease by the end of the year. And what you need to know about this is that a shorter timetable or larger scaling back of bond buying should potentially have a bullish effect on the euro, making it stronger relative to other currencies. Well, in case you missed the promo code during the presentation, this is your last opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is ECBFX. Again, we feel it's a great option to use our special offer either on this ECB event trade or on the market opportunity, but the choice is yours. And of course, we at 4Trade will be following any developments that affect the markets very closely. So please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Well, until next time, goodbye, and please join us at 4Trade soon.